What's going on, traders? We got a few things to talk about, so let's get straight into it. So, in our last video, we were talking about how the market is possibly looking to trap bulls. And I warned you guys that basically any upside you do get, there is a strong possibility that we're going to be looking at a trap, more so on the bull side, once again. And so now, where do we go from here? What are we looking at heading into next week? Now, I want to make this clear. I still don't think we're quite there yet in regards to an overall drop. And we'll talk about why in a bit. But it's very interesting where we are. We look at the NQ, we look at the ES, we look at the SPY, so on and so forth. It's very interesting where we are across the board. And it's just, I'm still not confident in the ultimate drop that I'm sure a lot of bears are looking for. Now, me personally, I don't care what direction the market goes, whether it's up or down. But right now, I have to lean more bearish just based on where we are. And we talk about this. We talked about these rising wedge patterns just forming across the board. Right now, we're looking at the NQ daily time frame. And as you guys can see, we're pretty much at the top of this rising wedge. And it looks like the market makers are pretty much just milking it here. I mean, we rejected here, we rejected here, we rejected here, we rejected once again. Bulls continue to try to break us out of this area and they continue to fail. And so at some point in time, I do think we are going to reject further down from this point. It's just a matter of when. Like I said, I think market makers are just pretty much milking it here until we get some, I don't know, crazy news. And I do imagine whatever news does come in, it's going to have to be pretty bad. Okay, really, really bad. And the reason why I say that, we talked about this, is these areas of turbulence. It's just a lot of turbulence towards the downside, and it's really going to be hard for us to break below this area here. So we would need some news, and if we do get some news, I imagine that news is going to motivate some type of gap down effect where we just break past these guys and then start filling this gap right here. Hopefully, you guys can see this. Where we start filling this gap in this area right here. I don't imagine we're going to go much higher until we at least clear this gap, right? And so as you know, if you've been part of my channel for quite some time, or even if you're new, my all-time high target for this year in regards to the triple Qs and the SPY, the triple Qs 510, about 505, 510, and the SPY, I'm looking at about 600. And so we're pretty close, okay? We hit 500 on Friday, but I don't think we're quite ready to get there. And so what I think can potentially happen from this point on is that we start to see some type of rejection or some downside heading into the beginning of the week. Usually, what happens on Friday usually tends to happen on Monday. What do I mean by that? When Fridays are bullish, typically Mondays are bullish. When Fridays are bearish, typically Mondays are bearish. And so we started to see some downside come in Friday, and so I imagine that's going to carry over into Monday, especially when we're looking at Bitcoin, which we'll talk about in a bit. So just to be clear here. So it doesn't sound like I'm rambling. We want to clear this area. If we're bearish, we want to clear this area out right here. Otherwise, it's just going to be annoying. We could just easily just do this over and over until whatever happens, and that's just going to be extremely annoying. Now, if we're talking about a bullish scenario here, like I said, I'm still going to stick by what I said. Any upside we do get, I imagine it's going to lead into a massive trap. So if we do just break out of here, which is very much possible, I mean, we can break to the upside of these rising wedges across the board, but it tends not to last too long. Just based off my experience, the breakouts of any bearish pattern to the upside tends not to last too long, and you kind of see some type of rollover effect. And then when you roll over, you guys know how I feel about rolling back into a pattern. You typically tend to go continue in that direction. So if we do break to the upside, maybe towards 21,000, max about 21,300, I imagine we're going to start rolling over and then heading back down into the pattern. So there is possibility for more upside here. I'm still not yet convinced that we're looking at the ultimate drop, but like I said, when we're talking about big tech earnings, the market cares about big tech earnings more than anything else. I don't care what CPI says. I don't care what Jerome Powell says. When it comes to earnings, that is what the market cares about. Why? Because big tech is what keeps this country running. Apple, Microsoft, these are the companies that keep this country running. And so if these companies start to fail, that means the country is starting to fail. All right. Hopefully that makes sense. If the companies are thriving, then that means in some way, shape, or form, really based on perspective here, that means the country is thriving. And so that's what the market really cares about. Everything else is just smoke and mirrors, whereas whether it's CPI, GDP, unemployment claims, all that stuff. That's just a bunch of smoke and mirrors. The big money, all the money comes from these big tech companies. All right. So hopefully I make that, hopefully that's obvious. Hopefully we're clear about that. So I imagine if any major drop or even newer highs from 500 happens, chances are it's going to happen because of big tech. If I had to guess, I imagine Apple is going to be the one that takes the market. Apple and Nvidia. We'll see. But we look at the ES. Right. And so the ES, we're pretty much rejecting this monthly level. We talked about this in the last video where this yellow line, right, horizontal line here is our monthly level. We've been rejecting it for quite some time here. We've been playing games in this area here. We can look at the monthly time frame. You see at the top of this wick is where we pretty much have it marked. And as you guys can see, we're pretty much rejecting here. We're playing games here and then we're rejecting. And at some point, like I said on NQ, we're going to want to fill these gaps to the downside at around 5,600, 5,650, more or less. But again, we have to clear out this area of turbulence. Very, very annoying. I mean, you see it right here. We zoom in and you see it right here. We try to break down, but again, we just reject it and bounce back up. Okay, so we're just stuck in this area. So until we get some like really, really major news, I imagine the news is going to be like have to be catastrophically bad for us to really break through this area. We're just going to play games in this area, and we may continue higher or have new monthly highs. That is very much possible, but until that happens, we're just going to be pretty much in this area, just trading over and over, and it's going to be very annoying. Okay, this is very annoying. Okay, so the reason why we're stuck here is just simply because of these guys. I showed you guys on the NQ. Now we're looking at the ES. It's just because of these guys. But look what happens. I meant to show this on NQ. Look what happens if you break below these guys. So you not only do you have a fair value gap and a gap that needs to be mitigated, but look how illiquid we are to the downside. Very, very illiquid. So if we break past these guys, we're going to drop pretty fast. Okay, pretty clean, pretty fast. These guys may hold us up here a bit, but regardless, we'll probably feel this gap, bounce back up, and then start to like really break down. So yeah, really, really pay attention to this area right here. You see it right here. We tried to break through, it failed. They stepped in, bull stepped in right here, and just brought us back up. Simple as that. So we really need some bad news in order to break down. And again, I don't care what direction the market goes. It's just more so right now, the position that we're in regards to the market and just where we are, it looks like upside is very limited right now. Okay, so let's look at the US 100 real quick. US 100 is pretty much showing the same thing. You have this rising wedge. You reject it here, you reject it here, you reject it here, and then you reject it here once again. Now, you do have somewhat of an inverted hammer pattern, and this is showing across the board. So we may bounce up a bit here, like may see some type of bounce here. But regardless, I mean, the upside is just so limited. So this is just a market playing games. Market makers are just really playing games and just really, really holding us here, killing everyone's premiums at this point, just really milking retail traders. And so right here, another form of turbulence. We really, really, it's just really annoying. We really have to break past this area at around 19,800. We get below 19,800, we're dropping pretty clean, okay? And then we want to see if we're bearish, if we want to see more downside, like really, really really big downside. We want to get below this rising wedge pattern. If we do see upside and we just so happen to break above, then I imagine we're going to head towards at least 20,800. And then if that's the point, I think we're just going to start rolling over. So pay attention. If we do break out, I think it's just going to lead to a trap. We hit these guys right here. This is, if you're wondering why I'm getting that 20,800 target, we'll hit these guys right here and then we'll start to roll over. So that's very much possible. All right. And this is why rising wedges are some of my favorite patterns because they're just so predictable. So predictable. If you break to the upside, more likely you're just going to roll over. It happens like clockwork. At least, I don't even know, 98% of the time. I won't say 100 because there's times I probably missed the rising wedge. But regardless, these are one of my favorite patterns. They're just so easy to predict. You're either going to break to the downside or you're going to break out to the upside, trap bulls, roll over, and then boom. It's like clockwork, guys. Trust me. So we look at Bitcoin real quick. So Bitcoin absolutely. I talked about this in the Discord. Bitcoin destroyed buyers. I mean, we talked about this in the last video on just how any upside that comes in is going to lead into a trap. And I mean, Bitcoin just absolutely crushed buyers. And I'm sure it was because of that banking news that came in, pretty bad news. But I mean, you saw it here. You broke out. You attempted to break, not here, but you had this bullish engulfing candle, bullish engulfing candle. So what do we talk about when we talk about these engulfing patterns? We pretty much say that they don't have to play out right away, and I guarantee, like a lot of buyers just got decimated right here. So I didn't buy this move for a second simply because, like I said before, when you roll out of a pattern and you not roll out, but when you break out of a pattern and you roll back into the pattern, chances are you're going to continue in that direction. So for us to break back out, I just didn't buy it for a second. And now I think Bitcoin is going to head towards 64K, 63, 64K, start mitigating this area, and then we'll have to see what happens from there. If anything, you'll just retest the neckline at around neckline around 63K, and then we'll have to see what happens from there. But I mean, like I said, rising wedge patterns, very, very predictable, guys. I mean, anytime you break out, this is a beautiful example on what I was just talking about with the ES and the US 100. Anytime you break out to the upside on rising wedge patterns, there's a chance that it's going to trap bulls. And you saw it happen here, right? And I was optimistic about Bitcoin. I thought it might hit 70K at least, but you see it right here. This is pretty much where it hit. You rejected here, you rejected here, you play games here, but regardless, and you ended up rejecting. And then that's exactly what happened right here. You tried to break out. Um, some inexperienced trader probably didn't even see this area over here or didn't, zoom out, whatever the case may be. They were just so focused on this bullish engulfing candle. Boom, got rejected, got trapped. Bye bye to your account. So it happens, okay? It's really easy to trap retails. Sometimes I even get trapped. It happens. It's part of the game. You just really have to pay attention to everything and just really, really lock in. And so chances are we're going to head much lower on Bitcoin. If we're talking about Bitcoin being a leading indicator, then chances are Bitcoin is telling us that the market is going to continue to drop. Now, if you don't believe Bitcoin is a leading indicator, I used to not believe that at some point in time, but now I do simply because Bitcoin has actual ETFs now. ETFs within the market, it has a foot in the game. So if you want to follow something and have an idea on where the market can go sometime next week, I would pay attention to what Bitcoin is going to do. If Bitcoin continues lower, then there's a good chance that the market is going to head lower. Okay. It's more likely to succeed than not, at least from my experience from watching it for this past 6 months or so. Okay, so that's what I'll be paying attention to in regards to Bitcoin. All right, so we look at the triple Qs. Where is the triple Q? So I gotta type it in because it disappeared. But we look at the triple Qs. And triple Q is essentially the same thing as the NQ, right? There's really not much to talk about here. What I will say in regards to the triple Qs is that it's holding up well, and it looks like a lot of indecision is happening here. And this is why you pay attention to both the futures and the ETFs because sometimes they will give you a different story. And right now, the NQ, not NQ, triple Qs is telling us a different story from the NQ, where the NQ is more so leaning bearish, right? So we look at the NQ real quick. The NQ is more so leaning bearish and a possible rejection from here, but the triple Qs is still holding that trend that we were just looking at. So the triple Qs is still holding this trend. So if we're talking about possible downside, we need the triple Qs to show that and correlate with the NQ. So there is possibility. So my point here is that there is possibility for potential upside, but I think it's going to be very limited, very, very limited. I think Mondays are usually boring anyway, so if anything, Monday may just be a bunch of consolidation. So I wouldn't have my hopes too high for Monday. We'll see. We look at the SPY. SPY essentially the same thing as the ES. We in this rising wedge pattern, but as you guys can see, we're pretty much stuck between a rock and a hard place on the SPY. We don't have much room here in regards to SPY. We're right below this resistance area. Let's actually go to the 4 hour time frame to actually make sure. So yeah, on the 4 hour time frame, we're actually breaking below this rising wedge pattern. So if and we're at support right now on the 4 hour, so let's actually zoom in a little bit. We're actually at support. So again, this is why there's no clear sign on a drop. Sure, we broke below this rising wedge, but there's no clear sign that a drop is going to continue on Monday. If anything, we may, again, it just looks like we might consolidate unless some news comes in, whatever the case may be. But it just looks like we're just going to consolidate because I imagine if we wanted to drop, we would have just broke through this area, but we haven't yet. One thing I will point out is that when you break below a fair value gap, there's a chance that you're going to continue in that direction. So we broke below this fair value gap, so there is a good chance that we're going to continue to the downside on the SPY. And right now, I'm looking at this next fair value gap at around 575. So we'll see. In regards to the triple Qs, I didn't really get into targets on triple Qs. Sorry about that. When we're talking about the triple Qs, I'm looking at about 485. Um, Actually, on the 4 hour, you are breaking this trend, so it doesn't really reflect on the daily, but you are breaking this trend. We can argue that this is some type of reversal pattern, a little hammer pattern, but we'll see. Regardless, in regards to triple Qs and my targets, if we are going to break down, I imagine we're going to head towards that 492 would be my first target, 490, and then I'm looking at about 487, 488. The lowest I'm looking at least for the short term, is about 485 on the triple Qs. If you want higher all-time high targets, if we break above 500, I think it was obvious that we weren't going to break above 500 right away. I mean, that's a very, very tough area to break. I don't think anyone should be shocked by that or expect 500 to break. That's a very strong psychological level. Um, I would have been shocked if we broke past that and kept going. So I imagine the market is going to pretty much collect some liquidity before we actually really break past that area and head towards our all-time high targets of 505, 510. When that happens, it's really tough to say. But if I would have to imagine that earnings is going to be the key reason of us breaking either that much higher or lower in regards to the overall market. So those are the targets I'm looking at in regards to triple Qs. In regards to the SPY, we talked about it. 575 is what I'm looking at, just to mitigate this fair value gap right here. And then next possible target from there is the lowest target I'll be looking at is all the way down here at around 568. We won't talk about that until we get closer to that target, but that is what I'm looking at. But right now we're pretty much in this range, so we can. It can be very annoying. I'm not gonna lie to you guys. It can be very, very annoying in this area right here. I mean, you could just that's gonna suck. Okay, so yeah, I mean Monday again, not really expecting much, but hopefully we get some type of action, if anything, on Monday. And so we look at Nvidia next. And so Nvidia has broken below the rising wedge. Okay, so yeah. So yeah, things are not they're not looking too bullish. I will say that much. So my expectations is either consolidation or some downside. Okay. If we do see upside, I will really, really take it with a grain of salt. We may retest 500 one more time, but again, I would not take it any. I would not take it serious. As long as Nvidia stays above below 142, I talked about this in a Discord with a member. As long as Nvidia stays below 142, it's pretty bearish. If it gets below 140, then that is very bearish. Okay, so I mean we're below this rising wedge pattern, so that is a bearish sign. But I wouldn't get too comfortable just yet until we get below 140. That's a very tough area. All right. In regards to levels, I'm looking at about 137. We break below 137, then we're heading to 135 on Nvidia. Eventually, I do imagine that we'll want to head towards 150. It's just a matter of how it will get there. We'll see. But right now, it's just not looking too good in regards to Nvidia. So it looks bearish. Simple as that. It gets back above 142. There's hope, but really, you want to see us get back above these guys. So we created a lot of turbulence. I mean, you got turbulence to the upside here, and then you got more turbulence here. So it's going to be very, very tough. I mean, Nvidia is going to need like amazing news. And the only news I can imagine Nvidia getting in order for us to really break above these guys is some type of earnings, some type of surprising news on earnings. But other than that, Nvidia just does not look good right here. I will watch 140 and look for a move towards 137. All right, so. That's what I'm looking at in regards to Nvidia. I think Nvidia is going to head to 135. I think it's pretty obvious in my opinion. Apple looks absolutely bearish as well. So this is one of those cases where you're seeing Apple and Nvidia align, and when you see that happening, that's very bad. Okay, well, I guess it depends on the direction. If they're both bullish, then that's very good. If they're both bearish, then that's bad. If you're bullish, okay, so um, they're both in a line, so they're both breaking below their patterns. So that is a very very bad sign in regards to the bull side, the bullish side. In regards to the bear side, if you are bearish, then yeah, you're looking really good right now. I will say Apple has a lot of fair value gaps. I mean, this whole area is annoying. Okay, so I would pay attention to Apple, but right now it's just not looking too good. I think Apple is going to head towards 126, 125. I mean, on a daily time frame, you see it right here. You broke down, you retested, and you still closed above, I mean, below the rising wedge. And so I do imagine that Apple is going to open up. If we do get upside, I imagine it's just going to pull one of these moves, hit this area of turbulence, probably 235 somewhere around there, and then trap bulls, and then boom, it's going to break down. Or it just continues to break down from this point. But regardless, I think Apple's going to head towards 225, around 225, 226, and then we'll have to see what happens from there. But if Apple and Nvidia are both dropping, then that's definitely a bad sign for bulls in regards to the overall market. Next stock I want to look at is Meta. So Meta has earnings coming up. All right, this is the juicy part. Okay, this is the part where you really want to pay attention here. I think Meta is going to crush earnings in a good way. I think Meta is going to absolutely decimate earnings. Before it happens, though, I think Meta is going to drop. Okay. And I'm going to show you guys why. So, one, we're looking at the daily time frame right here. We have this somewhat of a rising, broadening wedge pattern. Whether you take that serious or not is up to you. I don't take it serious. I don't take this type of pattern seriously. But I mean, but as you guys can see, we're rejected here, we rejected here, we bounced here, we bounced here, and so I think Meta is going to do one of these moves. I think it's, I think it's, I think this thing is going to kill it for earnings. Okay, I really do. So if we stay in this range, I think Meta is going to do one of these moves where it clears this gap out, right? Pretty much clears this gap at around, what is this, 540. And so this is what I will pay attention to in regards to Meta. 540. If Meta heads towards about 550, 540, or you can just mark this pattern or trend on your chart. If Meta gets to this area before earnings, I think it's going to do one of these moves. I think it's going to decimate earnings. Okay. I think it's going to do one of those moves and then it's going to drop. Okay. So this is why I'm not yet considering a huge drop in the market just yet or like some ultimate correction just yet because I think Meta is going to beat their earnings. And I mean, I think they're going to blow it out the park. Simple as that. And so another reason why, because I know you guys are just like, well, this is just speculation. You don't really have proof. You're just saying, oh, it might do this. Okay, so, but I want to show you guys. So once we mitigate this fair value gap right here, we're looking at the weekly time frame. If we hit this area before Meta earnings, look at this. This is the weekly time frame. Once again, look right here, guys. Boom. All right. I don't think we're going to break through these guys. I don't. For the weekly, I don't think we're going to break through these guys. If we hit this area right before, mark this on your charts. Like seriously, mark this on your charts. You rejected here. There's a wick right here. I hope you guys can see it. And then you rejected this area here. We talk about turbulence all the time. If we hit this area before Meta earnings, me personally, I'm going to look at calls. And right now, the contract that I am looking at in our Discord, go to our Discord. The bot alerted that whales are doing a 575 call for November 15th, 2.88 million premium. This is an unusual play. Considering that Meta looks bearish right now, this is a very unusual play to be doing so early. Think about it, okay? So when you're looking at unusual calls like this, where a stock looks absolutely bearish, but then you have calls coming in way before the bearish move is complete, this is an unusual play, and I think this is an earnings play because the date leads past earnings. All right, so I think Meta is going to absolutely crush it for earnings. So this is how you trap retailers. Okay, plays like this, right? The reason being is that if the average trader saw something like this, like a 575 call on Meta, right? And they saw this, they would just jump in right away. But Meta looks absolutely bearish. It doesn't look like it wants to go higher right now. We go down to let's go to the 4 hour time frame real quick. I mean, what about this looks bullish to you guys? I mean, we're just dropping, we're dropping, and then we broke below this fair value gap. We retested the fair value gap, and now, and what do I say about fair value gap? Chances are you're going to continue in that direction, right? And so I think at some point in time we're going to head towards at least 550 on Meta, right? We're creating lower highs, so we have lower high here, lower high here, lower high here, lower low here, and so the next drop we're looking at another lower low. So nothing about Meta looks bearish, I mean bullish for the short term. But then Friday, this trade comes in, and it's very, very unusual for this trade to come in. So 575 calls. Think about it. Okay, really think about it. This lines up with that call lines up with exactly what I'm saying here. Exactly the move that I am expecting here. We drop, we hit this weekly support, we fill this gap down here on the daily time frame at around 544, 545, probably even lower. We fill this gap right here. Boom, we head up. We hit the top of this pattern at around 634, 630. Money in the bag. Okay, I'm telling you now. I'm going to take the trade if this happens. If this move doesn't happen, then I'm going to stay out of Meta. I'm going to leave it alone. The premiums are going to be juiced. Meta is always juiced in regards to contracts. You're just not going to get anything cheap out of it. But I mean, you can look at like 575 cons if you want. Up to you. This is what I'm doing. Do what you want. It's not financial advice or anything like that. So we look at unusual wells, right? Um, Meta has 540 calls for January 17th, 2025. Very unusual considering the target that I was just talking about is about 540, right? And so this is an in the money call for January, but then you're talking about, and we're looking at this gap all the way in the 540s. Something to think about. So whales are bullish on Meta. They're bullish. Long term, they're absolutely bullish on Meta. And so I can't imagine a reason why Meta would drop. Let's actually, I can't imagine a reason Meta just drops for earnings. Whales are super bullish on it and continue to be bullish on it, and then it just continues further down. They're going to get absolutely destroyed if that's the case. I think this move is going to happen like clockwork. I could be wrong. It's earnings. It's a 50-50 play. By all means, do your own research, do your own due diligence. But I think this is easy money, in my opinion. That's just me. All right. We can look at the hottest contracts, and I haven't actually looked at this part yet, but we can check it out and see if there's anything that popped up for Meta. And so we see it right here, right? You see, I mean, look at this. You have 540 puts for January 17th, 2025. And so we zoom over and we see the ask is high, and then but you have more bulls in this play. That's an unusual play, guys. I don't know if you guys can actually see this, but there's 3,996 bullish volume versus 1,719 bearish volume within this play. And so, and then the bid is higher than the ask. That is not a this is not a bearish play. I'm letting you guys know that now. Then you have 600 calls for November 1st. You have 575 calls for November 1st. You have 570 puts, and then you have majority calls. I'm trying to find that one play. It's not even showing up. It's an unusual play, that's why. But we'll see. But other than that, I mean, let's actually let's look at the 600 calls. Let's see if we can find like cheap contracts or as cheap as you're gonna get, I guess, because Meta's just very expensive. You got the bid that's higher, and then you have more bullish value within the 600 call contract as well. You have 575 calls for November 1st. Let's see. Bid is higher, and then you have more bearish value. So mixed signals, but regardless how I still think Meta is absolutely going to be it's going to crush his earnings. I do. Um, if anything, if you guys want access to plays like this and see how I'm going to play Meta, or if I'm even going to play Meta earnings, uh, join the Discord. Discord link is in the description below. But this was a very, very interesting call right here. And the fact that Unusual Whales, and keep in mind, this bot is not following Unusual Whales. This is a completely different system right here. So the fact that this is showing the same play, well, not the same play, the fact that this is showing calls for 575 for November 15th, and then you have puts 540 puts that's coming in, but the bid is higher. Not only is the bid higher for them, I'm trying to find it here. Here we go. Not only is the bid higher, but you have more bullish volume in this play. All right, so very, very interesting. So that's really what I want to talk about in this video. Hopefully, it all makes sense. So just to backtrack real quick and just come to a conclusion here, this is the move I'm expecting from Meta. If Meta drops heading into its earnings, Wednesday after hours is their earnings, right? Yeah, Wednesday, October 30th. Meta drops, heads towards about 550, 540, somewhere around there, fills this gap. Once it fills this gap, if it if it does one of these moves, Because if it does one of these moves and like breaks down, you're getting trapped. I think bears are going to get trapped right here. I think this is a. I think if this happens, bears are going to absolutely get decimated. I do. It's too obvious. If this happens before earnings, and I mean literally like this, let's zoom in. If this happens before earnings, literally like this, it breaks below. I wouldn't even say breaks below. It breaks below this pattern, but holds the support. This is a bear trap happening, waiting to happen. I've seen this play before. I literally played this with my last earnings play. Um, so yeah, I think Meta is going to go straight to the moon for their earnings. We'll see. If I'm wrong, I'm wrong. It's fine. It's earnings. It is what it is. But if you want to see how I'm going to play that, Discord link is in the description below. This is how my performance has been for this past week. We only took one loss so far, and that one loss was ironically one of the earnings play. But we did Tesla earnings. We absolutely crushed Tesla earnings. We did WDC earnings. We crushed that earnings play as well, and then we lost on DXCM earnings. Pretty much got IV crushed on that. So two earnings plays for the win, and then these are our regular trades that aren't lotto and the percentages on them and how much we won on them so far or how much we're up on them so far. So as you guys can see, we're in a meta play right now, up 70% on it. It's probably more than that, should be more than that, but we'll see. Another Google play we're open on, Uber play we're open on. And then the rest of these are pretty much closed or that we averaged in on IW inputs right here. We're up 21% on that. So this is just pretty much giving you an idea on how my performance is. I keep the group up to date on my performance at the end of the week on our performance because I'm assuming they're going to follow the trace that I put out. That's why you joined the Discord, right? But if you want access to my plays, Discord link is in the description below. That's all I have. Until the next video, traders, have a good one.